Today, we're cracking a code that's right at the heart of pretty much every business decision. Understanding how costs actually work isn't just for accountants. It's this secret key that separates a brilliant strategy from, well, just a lucky guess. And it all kicks off with a corporate crime story.
So let's start our investigation right in the middle of a mystery. We're talking about a corporate crime where the weapon isn't some smoke and gun, it's just a simple price tag.
I know, it sounds completely backwards, right? We live in a world of sales, discounts, Black Friday deals, so how can a price ever be too low? Well, it turns out it absolutely can. And the reason why is this fascinating story about competition, cutthroat strategy, and the secret life of costs.
And here it is. This is the crime we're looking into. It's called predatory pricing. This is when a company slashes its prices, not just to get a leg up, but to literally wipe its rivals off the map. Because once the competition's gone, they're totally free to jack up prices to whatever they want. But, and this is the key, to prove it in court, you have to understand that company's costs on a deep, almost forensic level.
Okay, so to solve this mystery, we need to learn the basics of cost investigation. Every single cost a business has can really be broken down into two main types. And getting this part right, that's the first step to cracking any business case.
Here they are, fixed costs and variable costs. The names kind of give it away, but the real difference is super simple. Fixed costs, think of something like rent, they stay the same in total no matter how much stuff you make or sell. But variable costs, like your raw materials, they go up and down directly with how busy you are.
All right, I get it. Accounting terms can be a little dry. So let's bring this into the real world. Forget about a factory for a second. Let's imagine you're planning a wedding. Think about it, right? The price to rent the hall and hire that amazing DJ. That's fixed. It doesn't matter if 50 people show up or 150, you're paying the same amount. But the food and drinks, that's a per-person cost. The more guests you invite, the higher that total bill climbs. That's a classic variable cost. See? Simple.
And if you were to graph it, a fixed cost is just a flat line. Like here, you see the cost for factory supervision is 32 grand. It doesn't matter if the factory churns out 10,000 widgets or 50,000. That total cost is locked in. It's a constant.
Now, a variable cost graph, well, that tells a completely different story. Unlike that flat line we just saw, this one starts down at 0 and just climbs and climbs. The more you produce, the higher the total cost goes. That steady upward slope is the telltale sign of a variable cost.
Now, if every single cost fit perfectly into one of those two boxes, our investigation would be pretty easy. But, in the real world, things get a little more complicated.
So, say hello to mixed costs. These are the hybrids of the cost world. A perfect example is a salesperson's pay. They get a base salary every month. That's the fixed part. But they also get a commission for every single thing they sell, and that's the variable part. So their total pay is a mix of both.
And the graph of a mixed cost tells its story perfectly. See how it doesn't start at 0? That starting point on the vertical axis, that's the fixed part, the base salary. And from there, the line slopes up, just like a variable cost, showing the commissions adding up as more stuff gets sold.
And then you've got step costs. These guys are tricky. They act like a fixed cost, but only for a little while. Imagine you need one supervisor for every 20 workers. For those first 20 workers, that supervisor's salary is a fixed cost, right? But the second you hire worker number 21, boom, you suddenly need a whole second supervisor, and your total cost steps up to a new, higher fixed level.
But not all step costs are created equal. If the steps are really narrow and happen all the time, the cost starts to look and act a lot like a variable cost. But if the steps are super wide, like say you have to build a whole new factory to produce more, then it acts much more like a fixed cost for your day-to-day operations.
Okay, so we've got our suspects. Fixed costs, variable costs, and these complicated characters, the mixed and step costs. So now comes the real detective work. How on earth do you untangle all of this in the real world to actually make sense of the data?
Look, for any manager or forensic accountant, data doesn't just show up with neat little labels. It's just a big, messy list of total costs and how much stuff was made. The really critical job is to take these messy, mixed-up costs and separate them back into their pure fixed and variable parts. That's how you see what's really going on.
And this right here, this is what the raw evidence looks like. It's called a scattergraph, and it's just a plot of all the real-world data points. Each little dot is the total cost for a certain amount of activity.
The analyst's job is to find the one single line that best fits through that cloud of data. That line is what reveals the hidden cost formula, the fixed part and the variable part.
Okay, we've gathered the evidence. We understand fixed, variable, and all the complicated costs in between. We know how to analyze the data. Now, let's go back to our original mystery and deliver the verdict.
So after all that digging into the different kinds of costs, it turns out that one of them was the key to the whole case, the crucial clue. The one thing that separates legal competition from illegal predation was the variable cost. It was hiding in plain sight the whole time.
And this is the big reveal. The legal test for predatory pricing isn't just about selling something cheap. It is specifically about pricing a product below its average variable cost. Think about that. That means you're intentionally losing money on the direct cost of making every single unit. There's just no logical business reason to do that, unless your goal is to bleed your competitors until they go out of business. Our understanding of cost behavior just solved the case.
But hey, this isn't just about some high-stakes corporate legal drama. This whole way of thinking is the bedrock of smart management. When you really get your cost structure, you can predict future costs with amazing accuracy. You can actually control your spending because you know what's driving the costs. And most importantly, you can make way better decisions about everything, from what price to charge to which products you should even be making in the first place.
You know, once you learn to see the world through this lens, you start seeing it everywhere. It's in the price of an airline ticket, it's in the business model of your favorite coffee shop. So the real question to leave you with is this: what hidden costs, the fixed, the variable, the mixed, are secretly driving the big decisions of the world all around you?